morning. It's Graham Healy, the affiliate for Trade Canary in Australia and New Zealand. And today I'm bringing you an introductory video just to see, how do you get started with trading, basically, with a very small account. I'm semi-retired. And basically, I'm a semi-retired musculoskeletal therapist with a chiropractic degree and masters in dry needling. Now, I'll make this relatively short because we had certain technical issues last time, but it looks like we've got all that sorted out now. This website that we've got here is the site I've put together for Australia and New Zealand. And it basically showcases Trade Canary. Now, we'll get into that in a second. This is not live yet. It will be probably within the next week or so. Okay. So any inquiries, just come straight to Graham Healy. SMS me is the best way to do it as we go through the website. Basically, Trade Canary is what we call is a professional hedge fund data analyzer. So there's a little bit more details regarding that. Also the prices, we'll go through that as well. Capital 19, basically that's with every trading account, you've got to have a trust account that actually you do the trades through, or the vehicle you do the trade through a licensed stockbroker. And Capital 19 is our preferred options and stock broker in Australia. They're in Sydney. They have personalised service, and they will, because they're full-time professionals, they will answer any questions you've got on what I'm saying or Trade Canary saying or anyone's saying, actually, because that's their job. So they're a great asset to have. We recommend that you start an account with them. Just contact Capital 19. There's a direct link straight to their phone. Tell them that you are speaking to Graham Healy. And that you want to start up an account. Basically what that is a separate trust account, bank account for your trading, and then you can draw money out, put money into that particular account. There's a bit of a process you've got to go through there, but no worries, that's the way to do it. Here is our online accountant, Adam Kern. Just happens to be my son, but the thing is, Adam is highly qualified, and if you want any questions regarding Australian Taxation Office parameters, like for instance, I'm semi-retired, so I've got to see, what the taxation requirements are for me with profits that I make from trading, etc. So Adam will do that online, and he will charge a very, very reasonable fee. And apart from that, you can just call him and have a chat anyhow. But if you're taking up the time to set up, or recommend a program such as ATO requirements and that, there's a minimum fee for that. But just for an inquiry, just to have a chat to him, there's no charge for that. Now, basically, Trade Canary has a whole series of aspects. And, why have I joined Trade Canary? Well, I've spent 2 years doing other training regarding stock market contracts such as options, puts, calls, how to do, earnings trades, how to do iron condors, butterflies, pin butterflies, you name it. There's a whole gambit, the wheel strategy, covered call strategies. There's all these strategies out there. But at the end of the day, you need data to examine and diagnose these strategies. So that's where Trade Canary comes in. The founder of Trade Canary, Eric, and his team, a bit like, I paralleled it like they're the pilots in the cockpit. You imagine a 747 and you've got the pilot, the co-pilot, the engineer, and you can go up there and have a look. They're flying the machine, and what they're doing through the vehicle of Trade Canary, they're traders themselves. Eric said to me that he had a 98% success rate. That's unheard of. So if you want to get on board with Trade Canary, you will then also get on board with their commentary, and they're not giving financial advice. None of us are giving you financial advice, but we're giving you diagnostic tools that can filter all the noise out there and all the data to one page. So one page analysis, it's great using AI, of course. So as an example, Trade Canary filters about 11,800 odd companies on the New York Stock Exchange, and it filters millions of data points so that you get the bottom line. You don't have to be an accountant. You don't have to be a stock market trading expert. See, if you're to do this manually, it would take you years to understand all the strategies, to understand how the whole system works. And that was probably the older way to do it, before we had AI and data processing. Now, in saying that, I'll make this caveat. There is nothing wrong with basic training to understand how it all operates. Now, I did all that. I took 2 years to do that. And I'm very, very, what would I say? I'm a very analytical sort of person. So it has to be data driven for me to be interested. Of course, I've got a med science degree, chiropractic, and masters in dry needling and all that sort of stuff. So when you do that with patients, you've got to be deadly accurate, and you've got to be informed, and you've got to know exactly what you're doing. So likewise with trading, you've got to be fairly accurate, deadly accurate, I would say. You have to be informed. You have to make informed decisions. How do you make informed decisions? Well, most of the people out there just guessing. Oh, they're going to put money here, that money there. Well, that's just gambling. We are not gambling. We are using the data to make informed decisions. I want you to understand that. We're using data to make informed decisions. We're reducing the risk rate right down because you're making your decisions on trades based on analytical data. Professional hedge fund data analysis devices is okay. There is in-house training with Trade Canary. The guys in the US, the team in the US do weekly updates with what trades they are doing. So you're following them, or you can do your own trades. It's up to you. You do both. I do both. Then in the Trade Canary software, which I'll go through briefly, but this gives an overview, it's got unusual option activity. So it tracks unusual option activity. You might see the flow of money going into certain levels of options. There could be millions of dollars going into those options. I'll just switch my phone off. Millions of dollars going into those options. Through Trade Canary, you will actually see where they're going. So you will see the options, how much they're spending, and if they're buying the option at what they say the bid price. So the highest price, they're buying those options. That gives you an indicator. It gives you an informed decision that a lot of people are putting money into this particular level of option or this contract. And so therefore that might indicate the trend of that particular company in the very near future. Insider trading. Now, insider trading, there can be legal and illegal insider trading. So insider trading legally is what Trade Canary reveals to you. And this is documents, I think it's a Form 21 or Form 12 in the United States, where if a company director buys shares of his own company, he has to register with the appropriate authority. The equivalent of ATSIC in Australia, they'd have to register what they're doing if they're a company director or CEO or whatever. So if they're buying shares of their own company, that has to be all above board. The illegal insider trading is when they're not doing it above board and they're doing it secretly. That's a jailable sentence. But we're not into that, obviously. We're doing the legal insider trading. So when a CEO buys shares of his own company, this comes up in the data feed of Trade Canary. In our company screening, you will see that. You'll see the indicator. Oh, look, there's insider trading. You have a look. Oh, he's put $1.2 million into his own company in shares. Ooh. So that gives you an indication that the share value will possibly be going up very shortly. So there, and there's these little tips. Now, portfolio monitoring. Basically, a portfolio is all the trades collected together. I've got about 30 going at once, and out of that 30 that's going at once, you might have 2 or 3 over a particular week that hit the roof, or they might go the other way, and you can cover that as well. So the portfolio monitoring, there's a whole page on that where you can actually have Trade Canary track it for you. So that's great. It'll send you emails and warnings and all that. So finding opportunities. This is Eric, the designer of Trade Canary, is developing this continuously. So you've got a whole lot of you've got a whole lot of find new opportunities in trading. And, one that comes to mind is the cash cows, and I'll go through that on the particular site in a second. And then you go sector hacking. So what's sector hacking? Sector hacking is actually looking at all the different sectors, be it manufacturing or be it pharmaceuticals and what have you. So there is data that's driven through those sectors. We've got graphs and everything that give you indications of where the money's flowing, where that particular company is to the averages of all that sector. So, any of this terminology, just Google it and you can research it yourself, because I'm just going over very quickly. There's a little bit of the Trade Canary story. Basically, I joined Trade Canary this year, beginning of 2025, and I was introduced to it late 2024, and I realised this is the diagnostic tool that I want to be able to make informed decisions on any trades that I'm doing. So there's my personal story. I've sort of gone over that before. You can read that yourself. And in this site, where I'll go up here, we've got welcome, about us, service list, testimonials, book online, and there's a program list. I'll go to the program list. This here is where I'm actually doing beginners programs. Now, I'm not the expert, right? But I've been studying options trading for about 2 years. So I've done all the homework, and I've activated my account about October last year, and I've done it on a budget because I haven't got a lot of money to throw around. I want to make a lot of money, right? But I want to do it conservatively, and I want to do it with a group that is conservative as well. So as an example, when I did one of my first call contracts on Morgan Stanley, my risk was only 120 Australian dollars, and within 14 days that come back as 800 Australian dollars. So just recently, with the S&P 500 that dropped considerably with the tariffs introduced in the United States, I'm not against that, but it does vary the market because they all get shaky. And the S&P 500 went down to possibly one of the all-time lows. And of course, I bought calls based on the graph dropping right down low. And out of that, when it rose again, I made 2,000 Australian dollars out of that. Then recently with Boeing and Goldman Sachs was the same. Goldman Sachs, for instance, and I'll go through that graph in a second, same thing. Goldman Sachs dropped rather dramatically. So I found that as an opportunity to buy a call on Goldman Sachs, because that the biggest multinational banking organization in the world is going to go up rather than down. And sure enough, last week, Goldman Sachs, and again, this is a call I did for only $120. I keep the risk very low. I've got a budget account. My account was opened at $1,000, and I recommend to people semi-retired like me, $1,000 to $500. $1,000 to $5,000 is what I'm talking about, and then build it up slowly from there. If you've got more money to put into your account, that's great, but unless you get the fundamentals right first, do not throw money into trading unless you're really starting to get to know what you're doing. Be very, very careful. And it takes, I would say, 12 weeks to 6 months. It took me 2 years. It takes 12 weeks to 6 months to start to get a hang of it. And then, like, as I was just saying, last week, with the trades that I did, and I just added up what I'd actually invested. It's usually in $120 lots to buy the contracts, and what I earned. I made a plus 70% on return on investment. 70%. You'll never get that in the bank. 5% if you're lucky, and this is within a month. So the returns on the stock market, on the calls and puts, if you know what you're doing, if you've got software like Trade Canary to, work out the data properly, to work out the odds, to work out, to be informed, to make informed decisions on your trading portfolio, then, you could you imagine, like that trade I told you before, let's say it was Goldman Sachs I was talking about. Now, Goldman Sachs rose very quickly over the last week, and I had a call out with that like a month before when it really dropped, and I only invested 120 Australian dollars. It was up to 400 US dollars, and then I decided to pull out. Unfortunately, this happens. I pulled out a bit early. That trade, if I let it go for 2 more days, would have made another 1,000 US dollars. So I would have got 1,400 US dollars out of it. However, you got to use common sense, and you never be greedy in trading. You go, okay, it's made double. I made 4x of my investment. I could have made, I think it was 11x if I let it go 2 days further, but it could have went the other way too. But there's ways you can conserve the profits, such as stops. You do trailing stops. You can roll the trades. I won't go into that right now. But anyway, regarding this, I'm doing a basic beginner's trading, and it's just simplifying what calls and puts and all this. The training is also on Trade Canary Direct, and you can go straight onto that if you wish, or you can I'm doing really basics. Like, I'm very slow and methodical in what I do, and I'm very careful. So if you want to go through this course, which of course at the same time you can link on to Trade Canary. Now, I'll tell you this, the courses that I've done, they cost me a little bit over 10 grand. So a lot of these stockbrokers and, investment people, companies and that, they don't give it away to you. They don't give the training away to you for nothing. So when I do this training, it will be very reasonable. It's not going to be in the thousands, but it'll be very basic training. Now, when you purchase the software with Trade Canary, the training is included. And also each week they send you the SMS updates plus all the graphics on it's like a messenger called Patreon. And that's updated quickly and efficiently. And then every month, Trade Canary does a official webinar where they do the overall training, the overall stock recommendations, the calls that they're recommending and all that sort of stuff. So you're getting the best of both worlds. You're getting the beginning scenario from my perspective, where I'm very careful, methodical, I examine everything they do to the nth degree. And then you're getting, Eric and the team at Trade Canary, who have been professional traders for like 20 years. So their level of understanding is it's a higher level of understanding, if you can understand that. Where my level of understanding, even though I've started to catch up with them, I'm probably more applicable to someone who's just beginning. What do I do? And everything out there is so confusing, and I'll take all that confusion away and say, well, this is what I did. And I only invested $1,000. My account went up to, it's gone backwards and forwards a bit, but it's gone up to as high as $5,000 from $1,000. So 500% up, and I'm very conservative. So my objective, my goal is to build that account up to 100,000 within 6 to 12 months. Now, I'm doing that based on the original investment of 1,000. Now, if you've got more money, I suppose you can put more money in your account. But my thought pattern on that is this: learn the basics first. Do not throw money, good money, into something that you don't understand what you're doing. If you understand what you're doing, there's what you call limited risk. All the trades that I do are limited to 120, maybe 150 sometimes Australian dollars. I'm not doing any more than that. And that way I can afford, like that's 10% of 1,000, right? $100. So if you've got 100,000, it might only be 5%. You be very careful with what money you put on the table. You're all about making money out of the skill that you learn through Trade Canary and some basic training that I'm doing, so that you can double your income, so that you can double the investment money, but you've got to learn the skills, how to do it. And understanding data through Trade Canary takes all the emotion out of it. You just make calculated decisions. That's a true professional. Everyone else does it by emotion, or not everyone, but a lot of people do it by emotion. That's fatal. Or it goes up and down. The stock market goes up and down every day, and I'll show you that in a second. Okay, that's Trade Canary Australia and New Zealand, and that website will be launched very, very shortly. So Graham Healy. Now we move to the big Trade Canary data site, which is centered in the USA. And this is what you sign up to. And that's about, the price on that, I've got it here somewhere, is around about 5,000 odd US dollars. Got it on the website. So it's 5,497 US dollars to purchase this software. Now, you can break those payments down. We're working on that. The other thing is that this is an investment in a professional hedge fund data analyzer. So don't try and do it on your own. The training's included, and plus I'll be doing beginning training and all that sort of to help people along in my sort of level. Okay, here's the dashboard. So as you can see here, there's the training, beginners training, user training. There's training there as well. There's training everywhere, but depends on what you've done in the past as to how you can comprehend that training, right? So, there's the latest updates with the seminars and webinars are here on the dashboard site. Now, this is one. There's a couple of things. I won't go into everything because I want to make this brief. This cash cows. This is one that Eric designed just recently, which is, I love his diagrams. So this is about companies that are cash flow positive and they're a market cap of at least 500 million. So I'll go into that in a little bit of detail. There's range trading. I might go into that in a separate little seminar. Also, Eric's done a good seminar on that as well, a webinar, which is all available on the website when you go looking for it. But the trouble is, information overload is going to confuse you. So you want to just get drip feed, step, and baby steps. I can talk to on the course that I do. I'll talk to people about that as well. But let's just go to cash cow options. Now, cash cow, I don't mean it can be options. We'll just read through this. Now, this is in on the lists. So you go to lists here. You've got volume precedes price. You've got growth monsters, and you've got cash cows. Now, we won't go into volume precedes price or growth monsters. Similar thing. Cash cows, we'll have a little bit of a look at it. We'll just read through here. This list looks for companies with free cash flow. Free cash flow represents the cash a company has left after paying all its operating expenses. We take this list of the top free cash flow generators, then we sort out companies with less than 3 price to book. So that's a factor of 3. We'll explain that later, or a ratio or index, so that we can find future movers before they move. So in other words, we're looking for opportunities. Trading opportunities with market caps over 500 million. I think that's enough zeros there. Yep, 500 million. to keep it safe and liquid, right? Cash flow positive, and sort by the percentage below the 52-week highs. Now, we can go into that 52-week highs, 52-week lows. That gives an indication of where the company is with the share price in time and space. So, trading methods, longer term, building a position, looking at big future gainers, using weekly time frame charts. We'll get into that, read this later. But here is the list of these companies. So you've got, say, for instance, we've got, let's have a look. Okay, let's have a look at, where are we? Maybe GIS, General Mills Incorporated. It's got a market cap of 27 billion by the look there, and it's got a strength of 27. I'll go into the explanation later. It's 32% below its 52-week high, and it's got a free cash flow of $391 million. Price to book is under 3, which is 2.97. I'll explain that later. Price to growth is 3.7, and we'll explain that later as well. So I'll just quickly go to that, and you'll see how it comes up. Here we go. It's a building, going away there. Now, here we go. This is what you get with Trade Canary. You get all the facts in one page. So here it is. They make money, debt is under control, generate free cash flow, price to sales, attractive, and they explain that in there. Positive income, good margins, below average analyst price, oversold. So all these indicators are all there, and there's a weekly chart that shows you where this particular company, which is GIS Manufacturing, grain mill products, and there's a brief summary there what it is. General Mills is an American multinational manufacturer and marketer of branded consumer goods sold through retail stores, etc., and where its headquarters is. And then you have the industry strength versus the company, that's the ticker. And this is the actual flow of the company, right? Now, this is the blue line here is actually the general or all the stocks in this particular industry where this company is sitting relative to all the stocks, all the stock cash flow. So you see these little lighter lines down here. When it drops down a little bit further, you'll see the algorithm writes in buy. So when it gets right down, let's say it gets down about there, that line there, that strength of 31, which is a relative strength, look these terms up on the internet as well. It'll give you, I think Investopedia is a very good site to go to where it's like Wikipedia, but it's all about investment. And that I found that's very educational. Your strength of 31, say it drops down to about 20, it will trigger a buy signal for this particular company. And it actually has there written buy. So, this is the advantage. And there's your options. It gives you an overview of options, put to call ratios. So there's 5 million? 1, 2, 3, 5 million in puts, 5 million in calls. So they're pretty even at the moment. Then it gives you an overview of the company. How many people have got a holding, how many people are buying, how many people are strong buy, etc. 52-week histories. We can get into that in a second. A new 52-week low. See, there's an indicator there. So what does that mean? It's at an all-time low. So when a solid company is at an all-time low, it's cash flow positive, there's only one place for it to go, upwards. So these indicators here, range finance, I won't go into that. So that gives you a little bit of an idea what Trade Canary is all about, the find opportunities, insider trading, your own watch list, the picks. I'll go into the picks because Eric and the team, they do their own trading as well, and you can follow them. So Intel's one that I've followed with Eric some time ago. I've made money on it already. Actually, Intel has developed a new microchip called 18A, and that is going to be big because they're using that. They'll be using it in the American military, drones and all this sort of stuff. So that's going to be a big one. And so Intel's obviously not financial advice, but we've got the inside run that Intel's going to be, you go through the roof, and it's a big solid company. I think its market cap's over $1 trillion, and it's in every computer system that you've got. Intel's written on every computer system, right? Huge American company, and it's about to rise up very shortly. So you've got DraftKings, you've got all the charts that Eric's worked on, so you can understand it. Various software here, you can read all that yourself. So what happens is with these personal picks that Trade Canary gun team, or they're sort of like the gun team, this is what they're trading. And so they will reveal this to you week by week, and you can just follow along if you like, and you can do your own research through Trade Canary. So, okay, that gives you a little bit of an idea. Now, here is Capital 19. Remember, I spoke to you about Capital 19. This is where you set up your trading account. They're the preferred stockbrokers in Australia. I think they cover the South Pacific, actually. You have to talk to the guys. You can talk to these guys personally. They will guide you to set up an account. Tell them Graham Healy with the Trade Canary crew have recommended you to Capital 19. They're great. And also what happens with Capital 19, they set you up with your interface international brokers trading account. In other words, you've got a trust account with them where the money comes in and out, and you can take money in, put money out, pull money out, put money in, right? And when it's cleared, of course. And then they also are the agents for international interactive brokers, which is the interface onto the stock market. So through interactive brokers, you actually buy and sell the calls, the puts, the stocks, and all that on that particular interface. So I'll show you that in a second when we go through it. So, okay, Capital 19, they're the best, personalised service, great team there. Any complicated questions, I always ask Capital 19. If I don't understand something, I'll study it. I may ask Eric from Trade Canary. I'll have a look at videos. I'll do my research on the internet a bit. And then ultimately, if I get stuck, bang, I'll ask Trade, I will ask Trade Canary, but also I'll ask Capital 19 guys there. Matt's one of the guys I speak to all the time. And bang, they're professionals. They're doing it full time. So they've got the answers straight up. They can give you the answers in about 10 seconds. So they're really good, top crew. And they always ring you back. So that's their speciality, is personal service. So then the other thing you'll need is this is called Trade View. It's about $40 a month. And this is where you can draw your charts and all this sort of stuff. This is the best available interface for tracking the charts and what have you. So I've already got these charts open up. I'll give you one. This is off Trade View. This is Goldman Sachs. So, I did this recently, the one I was talking about. So these drawings on here are from me. I put my little icons there, and, this one was going to go through the roof. I pulled out at $400 US. If I left it go for 2 more days, you see here, I've just lifted up. There it was. I pulled out about there, 686. I mean, I got in somewhere down here, right? Then I pulled out about there. I thought, nah, it's not going to go any higher because it's already over its all-time high for Goldman Sachs. But no, it went into an indecision. If you can see here, that's called a doji candle. Boom, it shot up to here. Missed out on $1,000 in that run, but that's how it goes. I still got 400 out of it, so that's great. So that's Goldman Sachs. And then the other one, there's a series of websites that I've got 4 computer screens. I've got 4 open at once when I'm doing trading. And Goldman Sachs, Yahoo Finance is a great site, because when you look at this, there's a little bit of, like, I've got a lot of drawings on that. Now, that's relevant to me. You might get a little bit confused. Even it's a little bit busy for me sometimes. So I always have this one in another tab, which is Yahoo Finance, which basically gives you just a plain chart. So if I go on one day, that's today's trading, up and down, up and down. It flatlined here. So, you will see it live, and you look at 1 year, you can see the highs and lows in 1 year. 5 years, you can see the highs and lows in 5 years. And then overall time. So there you go. You can see, as you can see here, overall time for Goldman Sachs, you see up here, it's the highest high. So it has not been this high ever in all time. That's saying something about maybe Trump's policy, eh? Everyone got a bit scared with the tariffs. Now that he's locking in contracts, which he said he would do, the big American companies are going to higher highs. What does that mean? That means for those of us who got on here somewhere, we've ridden that cash flow wave upwards with calls, options, and shares. Okay, now we will drop this away, and you will see here, we'll increase this here. This is the Interactive Brokers site. This is my trading platform. When you go onto this platform, Capital 19 set it up for you, and there's certain parameters you've got to do as an amateur trader. You're not a professional trader. And this here is your trades, and I won't go into detail because it's just introduction. Here you see this is your orders. When you basically do a trade, it goes into the orders, and there's various processes that you go through with these orders. Like I've got Morgan Stanley at the moment. I'll just tell you about this one. I've got Morgan Stanley. It's a 150 call. Its time limit is August the 15th. The contract expires on August the 15th. So at the moment, Goldman Sachs is going up, or it pulls all the other global banks up with it. And so Morgan Stanley's on the rise as well. So I've put a stop in there, and I'll explain this quickly to you. With Morgan Stanley, it will rise up, it'll keep going, but to conserve the profits, it's already, if you have a look over here, Morgan Stanley sitting at about 194 US dollars. So I thought I paid originally for the contract, the options contract, 112, and now it's almost double. So when it gets to about 2x, I start to look at putting stops in behind the trade. So what I've done there is I've put in a stop, which is an electronic trigger mechanism, and it says here GDT, GTC, good till cancelled, and the S is a stop for 150 American dollars. So in other words, if that trade over here for Morgan Stanley drops any lower than 150, it'll automatically trigger and put 150 in my account. Now, if Morgan Stanley goes on its trajectory, and say it goes up to 500, say it goes this side here, I'm watching it live, and it goes up to 500 American dollars as an example, I will then change that stop to about 400 or 450. Now, what does that mean? I could go to bed then. I can go to sleep, fall to sleep, doesn't matter. If it goes down during that trading day and it goes below 450, where I set that stop, it will trigger the stop, put the money in the bank. Now, those sort of little techniques I can teach you on the Trade Canary Australia, New Zealand website, and I'm looking at doing all that. So when I'm speaking about Morgan Stanley, let's now go to Morgan Stanley quickly. I'll just bring that back up here. Let's have a look at this. We go here. Now I'll change that to Morgan Stanley just so that you can see what we're doing there. The Morgan Stanley comes up. Now there's a lot of hieroglyphics I've got on Morgan Stanley because I've still got this in action. But I just want to show you where Morgan Stanley's heading. Right, there it is there. You can see the candles. That's probably clearer. She's come from right down here, 95. It had a big drop. That's around about April, when they brought in all the, the tariffs and everyone got scared. The thing is, we don't get scared. We're dealing with data. We're not dealing with emotion. We're looking at, we knew. As soon as these drop, bang, we're in there buying at the bottom. See here, right here, down there, 94. Morgan Stanley's shares are now worth 140.86. You get in here at 94 and then watching as it continues up, a little bit of a pullback. Then she's onto a burst again. So this here, I've drawn in what they call a bull flag. I don't do them all the time. I'm usually relying on, the data from Trade Canary, but I have been taught to do the, draw the flags and the W's and the M's and all the rest of it. So I just saw, yep, that's a bull flag. And then what happens with the bull flag is there's the pole or the post of the flag, there's the consolidation, and then what happens, it duplicates the pole. You see, that's the duplication of the pole. What's it doing? It's doing exactly that. It's building. It's going through a 5-year highest. So Morgan Stanley hasn't been above 140. It's now above 140. It's going to what they call a higher high. So I've put in a trade here where I've said that, okay, it may reach, I've calculated out by using the data on Trade Canary, may reach 150, may go up another $10 to 150. If it does, I've done a call, 150, 15th of August 25. And if that goes to 150 and beyond, that will make 1,277 US dollars based on, I only put 120 Australian dollars in to buy the contract, or that's almost 1,964 Australian dollars. So, you won't get that interest rate back in the bank, but you've got to know what you're doing. Okay, so that's Graham Healy over and out. We'll go back to the Trade Canary, Australia and New Zealand. I've got my phone number there. This will be launched shortly. So, basically to start up with, I'm saying that, look, if you've got anywhere between 1,000 and 5,000 to invest, that's for your portfolio. Obviously, you'll need another 5,497 for the Trade Canary software. I think we can break that down into payments, 3 payments or 4 payments, 3 payments, I think. So that's more affordable. So then you've got the training from Trade Canary, you've got base training from me. I'm looking at sort of doing base training for, like $500 or something like that. And you can break that down into payments as well. So that's Graham Healy over and out. I hope that helps. And that's the introductory video. And have a great day. Happy trading.